So welcome everybody to the Field Fisher and Arcano Partners webinar regarding the Spanish motion picture production incentive, based obviously on a very efficient and user-friendly tax scenario and a law which went into effect in January of 2021. With us today, we have Miguel Doria of Arcano Partners. He's a partner in the asset and capital finance team at Arcano since 2019, and he has nearly 20 years of experience structuring asset-backed financing transactions, and he has been involved in projects that include shipping finance, film financing, and green assets, among other industries. Before joining Arcano, Miguel was executive director at Banca March and Banesto Asset Finance. Juan Osuna, who will be speaking after Miguel, he joined Field Fisher in September of 2020, and he advises national and international companies on tax-related issues in Spain. He's an expert in tax planning, and he's participated in the design of international tax structures for both foreign and Spanish multinational companies, adding value by tailoring the tax strategy according to the economic activity of each client. He also has extensive experience in the field of tax compliance, advising companies on how to adopt, implement, maintain, and improve their internal tax policies. And so with that, I'll turn it over to Miguel to kick off the description of the tax incentive.
Thank you, Stephen. Thanks to you and all the Field Fisher team who just invited me to participate in this webinar. Good morning to all the US attendees, and good evening to the EU or European attendees here. As you're attending this webinar, you probably at least once have thought about shooting or producing a film or a TV fiction show in Spain. And the purpose of my speech and my presentation is trying to explain you how we have been collaborating with Spanish producers and international producers in the last few years to take advantage of the tax incentives here in Spain. Okay, I have prepared a very short presentation to try to give you a light about how this work with Arcano and how we've been able to collaborate with this company, these studios. First of all, I would like to tell you something about Arcano, okay, so you all have a perspective of who we are and what are we in Spain. Here is the main figures of Arcano. We are an independent financial advisory firm here in Spain. It was incorporated in 2000 by former investment bankers. Now we are over 200 people working here in Arcano. We have different offices in the EU, in Spain and Italy, but also in the US. We have offices in New York and Los Angeles. And we have three main business areas. We have the investment banking area, which we do all the investment banking business, M&A, debt advisory, debt restructuring, IPOs, debt capital markets, all those kind of things. We also have a very strong team in economic research, which does very good studies, analysis of the Spanish, EU, and global macroeconomy. And we do have probably the biggest asset manager in Spain for alternative investments, in which we basically participate in most of the strategies. You know, we have the private equity strategy. We also have funds with infrastructure. We do have venture capital funds. We also have credit funds, real estate funds, and our team, which is asset and capital finance. Okay. Asset and capital finance team has been a leader in Spain in the last 18, 19, 20 years since we began working in Santander Group in 2004. And we have structured different assets financing. In the film industry, we have done projects since 2011 for more than 500 million euro. Okay, for international producers, but also for national producers in Spain. And the kind of assets that we usually finance is film financing, shipping, as Stephen was saying, green assets, but also R&D, which among all those assets we have here in Spain, tax credits and tax incentives. We have raised 1 billion in capital, tax equity, as we call it here in Spain, for these projects. We have more than 90 vehicles, SPVs, and more than 100 operations closed since the beginning. Here is what we have launched, or what we launched last year, with this new way of financing the tax incentive for films in Spain. It was passed at the end of 2020, December. At the beginning of 2021, we launched this vehicle. We were probably the first one to start doing this kind of financing here in Spain. As you see, it's a very straightforward structure. It's not as fast a structure we've made in previous transactions, where you have to incorporate different SPVs and you have complex agreements between all of them. And if you remember, probably it works the same in the States, because we have seen that in other jurisdictions. You need an SPV for each project, and you need some kind of put and calls scheme and options, so that you can get back your copyright once the transaction is finished. With this new structure in Spain, everything is much easier. We have Arcano, we have the investors behind us, and we execute all the financing agreements, financing contracts with the production companies. That's number one. Okay, those financing agreements are quite simple. It says, okay, I grant you a loan for this amount once you show me evidences that you have committed a project of this size, and you will repay me that loan by the transfer of tax credit. Okay, by doing so, you will receive the funds during production, which means shooting or post-production, but for sure before delivery or before completion of the project. And by the end of the project, you have to do together two regulatory requirements, which are: we need to obtain the nationality certificates. That's the number 3. And we need to ask the culture department, culture ministry here in Spain, to give us, or give the project, the nationality certificate and cultural test. And we also have to communicate the tax administration here in Spain that you have transferred Arcano as a producer the tax credit that you generated by your project. Those are quite simple notifications, communications to the administration, and that's all. Okay, after year end, the tax credit is transferred to the investors, and the deal is over. So Arcano proposal for this kind of transactions is basically a quite easy and recurrent financing for any Spanish nationality TV or film projects. Okay, because it's so simple, it allows us to go for not only the big projects. I know that big projects in the US or in the UK are different than big projects in Spain. The size of the Spanish projects are usually 2 million or 2 to 3 million. So it's good for the local producers, but it's also good for the big productions. And we are ready to work with up to 80 million per year in one or several productions, and in any kind of TV series, films, documentaries, or TV movies. So it only has to be a fiction movie, and it has to be Spanish. Okay, it has to receive the Spanish nationality. So the benefits comparing to other kind of structures that we have seen here in Spain is that you will receive the funds, the producers receive the funds during production, because that's a requirement by the law, and we are ready to advance the funds during shooting if that's necessary. We will ask for a bank or corporate guarantee, because that's something that we require, because we need that until completion of the film and the certificates are received. We also have here in Spain certain guarantee institutions which are partially owned by the administration that are ready to provide those kind of guarantees. There is a specific one for the audiovisual sector, for the film industry, which has been working for us since we launched this transaction or this structure. And companies or production companies will receive between 16 and 18% of the production cost after subsidies. Once you receive, or you are about to receive, the Spanish nationality of a project, you are also allowed to receive subsidies, but we have to deduct those subsidies from the production costs to calculate the amount you receive from the tax incentive. So at the end, as we have seen in the past, the number that usually US producers see as how much is the benefit comparing to other jurisdictions is how much euros, or how many dollars do I receive for every dollar, how many cents do I receive for every dollar I spend in Spain. And this could be up to 30% of each dollar a production is spending in Spain. This is because the requirement is only to spend at least 50% of the production cost in Spain. The other 50% could be spent in Portugal, Malta, and any other EU country or any other country. Okay, there's no other requirement for those other expenditure. So that's why we could reach 30% of each dollar Spanish expenditure. Is compatible with subsidies or any other foreign tax rebates. We have seen co-productions with Portugal in which they receive the funds from this tax incentive, but they also receive the funds from the tax rebate in Portugal. So that's perfectly compatible. And also projects, that's something that the talent usually requires. These kind of projects, because they receive the Spanish nationality, they are eligible for the EU and Spanish awards. That's something that with certain studios, mainly platforms or streamers, because they need to have all the originals in the US, all the Spanish originals are not really Spanish nationality. And by doing so, the talent are not able to receive any Spanish or EU awards. But with this transaction, they will be able to receive it. And the requirements of our proposal are basically those ones that you see there. I mean, the copyright ownership by the production company has to be at least for 3 years after delivery. I mean, the copyright is never out of control of the studio, which we think is good. So, but they have to keep the ownership of it until year 3. They could sell all the distribution rights, but the ownership has to remain in the production company. The finance for the rest of the production budget should already have been granted. I mean, we need to have comfort about that the project will be finished and will be completed, so that the production company owns the funds, the necessary funds. The production must be completed. We have included here 2023, but this means that by year end, I mean, we need, when we make a commitment and we establish that that production is for the fiscal year 2023, we need that the project is completed and finished by 2023. If it goes beyond 2023 and 2024, we'll have to rearrange probably the agreement and see if the investors are willing to accept the tax credit in 2024, because tax credit is received when the film is completed. Okay, we need to include a non-change of law regulation. This is quite remote because this is a brand new way of taking advantage of this tax incentive, but we need to include it until year end, because once year end has finished and there is no more risk of change of law, and the Spanish nationality has to be obtained after financing has been charged cash. So we do the cash, we transfer the funds to the production once we have the information about it, and during shooting or post-production. But after that, you need to obtain the Spanish nationality certificates and cultural test. Okay. So this is basically the structure and proposal. As you see, is quite simple. In the last 2 years, we have financed 12 projects, which production cost has been over 65 million euro. We have doubled the size of our investment since last year to this year. So we expect to, if not keeping doing twice the budget that we have done in last year, at least to increase it, because the truth is that we have the investors, and we are willing to keep working with the film industry in this kind of transactions. Here is our team, okay, a complete team, which we do all these kind of transactions. The front office, the support team, our investment committee, because we analyze every transaction in that committee. And well, I'll wait. We will wait until Juan, and I'm sure we are both happy to receive questions that you may have at the end of Juan's in participation. So thanks to everyone.
Thank you, Miguel. Thank you very much for that. And for those that do have questions, please pose them in the question box. We'll be collecting them as we go along. And after Juan concludes, Tim will be available to moderate and make sure that anybody who has any questions gets their questions answered. So with that, I will now turn it over to Juan.
Thank you, Stephen, for your introduction, and thank you, Miguel, for your explanation. Well, my name is Juan Osuna. As Stephen has said, I'm the tax partner here in Madrid Phil Fisher office, and what we are doing in our office is trying to advise those producers that are creating films or TV series in Spain to obtain their tax credit, and also to those financial entities that want to finance all the investments of these productions to be able to obtain the tax credit that has been created in the year 2021. I think it's important to understand the way that the government in Spain has been analyzing and deciding the way to promote the Spanish movie sector. And this huge amount of years that the tax authorities decide to promote the production of movies in Spain with a large tax advantage to the producers. This means that there's many producers in Spain know really well the way that the tax authorities give them tax credit, but they give them the opportunity in the year 2021 to give those tax credit also by a transfer to those financial entities that want to invest in Spanish cinema or Spanish movies. The main idea is, I think, is fairly to understand how is working this tax deduction for audiovisual production in a fast view, and later we are going to try to explain how is working the financial deduction. Bear in mind that Miguel has explained it quite perfectly before me. So the key point, I think, from the tax deduction is that the deduction is just from the content of cost of investment and not expense. So we are not just giving deductions from just for the expense that we have during the year, also for the cost, for example, for those materials that you are using for those productions. You are able also to obtain the deduction for the cost, for the part because of it. The deduction in Spain is the 30% of the cost in the first million of production, and the index test is the 25%. As Miguel said, it's important to understand that this is a yearly tax credit, and the tax credit is because of the production of cost of each year, but it only applies once the production is completed. So once the production is completed, those audiovisual productions company are able to obtain the tax credit and apply it on their corporate income tax. From a finance point of view, since January 21, as Miguel said, those companies that are financing producers in Spain are able to obtain the tax credit for the producers. This means that, of course, that the producers don't need to repay in cash the financing that they obtain. What they obtain is the tax deduction, and they are able to apply them in their corporate income tax. This is important that it must be linked with a contract must be linked with the production is not able to obtain that tax credit. Any financing that the producer obtain, it's important that a specific contract that must be done by special financial advisors, as my colleague Jacobo from our office in Madrid. Also, it's important to have financial advisors as Arcano to assist you on this kind of transactions. The deduction must operate under the same conditions of the producer, what means that we are in the same terms as the producer, but it's capped at up to the 120% of the total amount that you are financing. That's important because it's normally in that kind of transactions that not happen, but there is a cap where the financer could not have the total amount of the deduction if it is over 120% of the total amount that they are financing. The production must be a Spanish national certificate, as Miguel says, and the deductions cost, also as Miguel has said, applies in the moment that they obtain the film national certificate. Once they obtain that national certificate, you are able to apply it in your corporate income tax, and there is when those financial entities obtain the refund of the loan that they give them with a tax credit. So we are more than happy to those assistants to are interested in this kind of transactions in Spain to assist them in one-to-one call, also with the Q&A that we are going to open now with my colleague Jacobo from the finance department, that is one that is linking those financial contracts with the productions, and also with Miguel, that is the financial advisor in Spain, that currently is the best financial advisor on this matter nowadays in Spain. So more than happy to assist you if necessary.
Thank you, Juan. So with that, I see that there have been some questions coming in, so I'll turn it over to you, Tim, to make sure that everybody gets their questions answered.
Yeah. So again, just to remind everybody, if you have got a question that you want to be put to the speakers, just please do fill in the question box, which you should have on your menu, and I will then be able to pass it on. Just before I go on to questions, I should say that I've had the pleasure of working with Miguel and Juan and Jacobo and their excellent teams on these deals. It is probably fair to say that, like all tax credit arrangements, they can seem quite daunting when you first see the set of requirements and structures that are required. I think it would be fair to say, and I think Miguel and Juan and Jacobo would confirm, the documentation for the Spanish tax credit financing arrangement is pretty tried and tested. And so whilst it sounds complicated at the outset, in fact, the documentation is tried and tested. It's been run through a number of projects. And so people should not be daunted in using it. The other thing just to say, for the benefit of people from the UK who are on the webinar, obviously we have a tax credit system in the UK, and the way we get the cash for the tax credit is we actually surrender it back to the government. So we actually get a check from the government. In Spain, it's slightly different, which is the producer gets effectively a tax credit, which it passes over to the financier. So you need a financier who is a Spanish taxpayer, because you need a financier who is able to take the benefit of that, if you like, tax write-off, which is why Miguel and his team at Arcano are important, because they have a roster of Spanish taxpayers that they go to enter into these arrangements. So with that, let me pass on a couple of questions to Juan, Miguel, Jacobo. The first question, I think, is we've talked here that this tax credit is only available for Spanish nationality projects. Now, obviously, a lot of people on this webinar will be interested in moving some or all of their production for a big international production to Spain, partly because there are good locations, there are good crews, but also, of course, because there's a very valuable tax credit. How easy is it to qualify as a Spanish nationality production? It doesn't, I think, have to be in the Spanish language, just as an example.
Yeah, well, there's different ways to obtain the Spanish nationality. For big projects in which we have been involved in the past, they have chosen to have Spanish co-productions. Okay, so when you have an international co-production, US-Spain co-production, you don't need to qualify or to fulfill all the Spanish nationality requirements. So they have to be proportion to your Spanish share in the film or in the TV series. Basically, what we all here in Europe and especially in Spain require is to have Spanish or EU cast, Spanish or EU creators of authors, which is called authors, which are the scriptwriter, director, music composer, or DOP. And between the crew, we also need to have a Spanish and EU team. So it would all depend on the share of the Spanish contribution to the film. If we have a 50-50, then we have to be close to that 50% in contribution of these key roles or key people in the project. If we do have a 75, then we need a higher amount. That's basically. But at the end, even though we're in the EU and we could do a film or a project with non-Spanish but EU members, I could tell you that when you approach the Ministry of Culture, they would not like those kind of projects. And even though if they are forced to approve the nationality, they will try to find some ways to make you to include a Spanish talent and a Spanish crew in the project. So at least I would say we need all the Spanish of the EU members, but we need a few Spanish people in the project.
Brilliant. Second question, I think I may have answered this in the remarks I made earlier, but a question's come up, which is does the production company in Spain have to have corporate tax liability? And I think the answer to this is no, because what you do is you transfer the tax credit to somebody else.
That's right. That's right. That's our job. I mean, we have to, as you previously said, we have to look for those tax investors who have enough tax capacity in Spain, and they're able to take advantage of the tax credit. The sooner the better, because that's the return of the loan.
So in fact, the whole point of it is that, of course, most production companies don't have enough profits to be able to take the benefit of it, which is why in the UK, production companies surrender their tax relief. Now, the next question I have is definitely for Juan, which is, does all of this relate to Article 36.1 of the Spanish corporate tax law?
Yeah, that's it. The deduction is the 36.1, of course, but the one that we are applying now is the 39.7. That is the special article that has been created to the financial, but there is pending on the deduction of the 36.1. Yeah.
Brilliant. And then another question's come up, which is we've referred in these discussions to tax credits and tax deductions. I think they're effectively the same thing. Is that correct?
Yeah, exactly the same. Sorry.
I think the way it operates, correct me if I'm wrong, is the production company, by producing a Spanish nationality project, earns, if you like, the right to deduct certain costs from its tax bill, but because it doesn't have a tax liability itself, it transfers it to somebody else who can then make use of that deduction.
Yeah.
Brilliant.
Exactly. I mean, what we have done in the past and how the tax-driven structures usually work is that we take advantage of mainly two things: the tax credit, which are specific of a certain investment or a certain industry, as film or R&D or shipping or whatever, and then the depreciation of the asset. Sometimes the depreciation of the assets is not really valuable for the producer because they do not pay taxes. So it's something which is not going to take a tax saving, which is not going to be valuable for them. And in certain structures, you can also transfer that tax saving and the tax losses to a third party. This is not the case. We are only transferring the tax credit, which is specific of the film industry.
Yeah. Also, the point is that in Spain, since I think like 8 years ago, we have problems with the companies to deduct all the amounts that they are getting because there are limitations on the deductions, and those producer companies have because of those limitations, also because they don't have really big incomes, but because of those limitations, they have problems to obtain the full tax credit each year. So they are obtaining better refund, better interest rate if they are doing this kind of operations.
Okay. Another question: if the program or film is produced under an official co-production treaty, presumably that means it will be automatically Spanish. It doesn't have to separately qualify under the Spanish nationality test. Is that correct?
Well, what happens is that before you ask for the nationality of a production or officially a co-production treaty, you have to present the project to the Spanish Cultural Ministry. So at the end, it will have to follow the same rules. They will do a pre-approval, and at the end, when you finish the project, they have to make a review of everything and check that everything what you told them you were going to include in the project is right there. And so at the end, you need to receive the Spanish nationality certificate for the tax credit. That's necessary. Although I agree with that question that if you follow the treaty, you should be allowed to receive the nationality straightforward. But the point is they have to check everything at the end of the project, and you need to receive at the end of the project, when the project is finished, the certificate anyway.
I think that is true of all film and television co-production treaties, which is you apply in the first instance for an interim or provisional approval, and then you have to go back when you've completed the show or the film and get a final one. The next question is about if you have a co-production, and obviously if it's a co-production, you'll be spending money in more than one country. Is the Spanish benefit calculated on the full budget or only on the part spent in Spain?
It's only calculated on the part expended in Spain, not exactly on the part of the budget expended in Spain. If we, for example, I will put an example to see if I explain it correctly. If we have a budget of 100 and we have a 50-50 co-production, we need to spend from that 50%, which is Spanish, at least 50% of that 50%, which is 25 of the overall budget, has to be expended in Spain. We can spend more, obviously, but we will not receive a higher benefit because the base for the calculation is the Spanish share in the co-production, which is 50. So among that 50%, we need to spend at least 50% in Spain, which is 25.
So if you spend 25% in Spain, so in other words, at least half of the Spanish co-producer's contribution, will you get you will get the benefit based on the whole of the Spanish co-producer's contribution to the budget? Is that correct?
You will get 30% for the first million and 25% of that 50 for the rest.
Okay, so yeah, so that is actually a generous allowance compared to some other jurisdictions.
Yeah, that's
so
why we mentioned in our presentation that even though the percentage that we pay for the production cost is between 16 and 18, at the end you double that if you consider only the Spanish expenditure, because you don't need to spend everything in Spain. You only need to spend 50%.
And then we talked during the presentations about the fact that the credit is provided, or the benefit is paid during production, but also that obviously the financial investor who is effectively buying the tax deduction needs to know that the show or the film is going to be completed and is going to qualify as Spanish. What sort of guarantees do they require before they're willing to, if you like, write the check?
Yeah, the process is quite simple. I mean, we get to an agreement about the loan and the conditions of the loan. We execute the loan, and then we have to, the production companies make a withdrawal application so they can receive the funds. That application needs to show that, you know, the key elements of the project that will allow it to receive the Spanish nationality, an auditor's report in which we see that the project is progressing correctly and that certain expenditure has been made, and Spanish expenditure, as we commented, as we talked previously, and also a guarantee. Why is the guarantee? Because we are advancing all the funds, but we are not sure yet that the film is going to be completed in that year, because our commitment is, and the commitment on the producer is that to finish the project during 2023. So because we want to receive the tax savings in 2023, because our investors know that they will have tax capacity for that year. If the tax credit is received next year, 2024, then our investor may not be willing to receive those tax savings. So that's why we need certain comfort about that the film is going to be finished in the year and the film is going to receive the tax or the nationality certificates in the year. Okay, so that's why we ask for the guarantees. And the guarantees are usually a bank guarantee, which could be one of the producers' banks, commercial banks guarantee issued by them, or this Spanish guarantee institution, which is CREA, which works for the film industry and cultural sector. And we have been working for them in the last 2 years, and they are very focused on the project rather than on the solvency of the producers. So that they really look at the project, how it's being financed, and if the producer have the ability and the ability to finish the project. So it's more like a technical guarantee rather than a financial guarantee.
So just to clear that up for the person who answered the question, you do need a guarantee. You need a guarantee from a third party, but actually there is a tried and tested process by which Spanish production companies can obtain such a guarantee, and the Spanish entity that grants the guarantee is not looking at the, if you like, the corporate financial wherewithal of the company. They're looking at the project itself. And it was Jacobo actually from our team who worked on that. And Jacobo, I think it'd be fair to say it's a reasonably straightforward process dealing with the Spanish guarantor.
Exactly, Tim. Yes, we in previous projects we work along with CREA in order to obtain that guarantee, also with Arcano, and it is the way you say it is quite straightforward. It is a really simple proceeding to get that CREA, which is sort of public entity guarantee.
Brilliant. And then I have one more question. So in some jurisdictions, in the UK, for example, there's no cap on the amount of film and TV and indeed other creative industries tax credits that can be made available. But in some jurisdictions, there is. So in Germany, for example, the federal grant or the federal tax, it's not a tax credit, it's a federal grant, is capped. So there is the possibility, if you're late in the year, of actually losing out because you don't get high enough up on the list. And I think the same applies in some of the US states where there are credits available. Is there any limit? Does the Spanish government impose any limit on an annual basis on how much tax credit can be granted to film and television? Juan, do you want to take that?
Yes. Yeah. There are many limits from the companies nowadays to applying those deductions in Spain, and that's why it's important to analyze whether or not to invest and the total amount to invest at the beginning of the year, because they are creating limits. There are certain limits in the deductions to be applied each year. So you could have the problem to not being able to apply the full deduction one year if the incomes that you are expecting didn't came. This is the mainly risk I think that you are taking when you make this kind of transaction.
And how can you get comfortable that you are, if one of the people who are on this webinar decides that they're going to bring their production to Spain, how can they get comfortable that they are not going to discover when they make their claim, or that they somehow have, other people have got there in advance?
No, not really. I mean, I think, sorry to interrupt, but I think there's been a misunderstanding. If I understand correctly, you were asking if there's any limit for each project, because I know in certain jurisdictions there is no limit for each project, but in Spain there is. And I think it's, correct me if I'm wrong, Juan, but I think it's 10 million per production, per project.
Per tax credit,
so
yes. That's per tax
Oh,
credit.
okay, so that actually wasn't the question I was asking. The question I was asking was, is the total amount that can be claimed across all productions in a year capped? Because in Germany, for example, it's not. Okay, so there is a cap per project. So
and per year.
Yeah, per project and per year.
Per project per year, because you could
per
make
project per year. Okay.
More than 10 million euros per project, but it's just 10 million euros per year.
Okay, so but there's no danger that because you are the 25th project that year that you would somehow no. Okay, so the caps apply per project.
It's a huge amount, 25, I guess, but yeah theoretically there's no problem.
The problem is that you need to find investors. You need to find the tax capacity. So as always in business, when you have a crisis, there's less tax capacity, and when you have a good economic cycle, or the nice size of the economic cycle, you have more tax capacity. So it depends on that's on our side. I mean, we look for investors every year, and we have conversations with them every week.
So the cap, if you like, is not a government cap. The cap is how much financial investor interest is there in buying these tax credits.
That's why I understand that what you were asking at the beginning. That's the risk of the financial companies if the company is able to apply this tax regime in the year that they are obtaining. That's the main risk, and that's where Arcano entry.
Right. Okay. So what you need to do is you need to find your investor, and then you need to be ready to deliver your project in time for the certification to meet the tax year that they want the deduction. Another question has come in which relates to are there regions in Spain, and the one that's been highlighted is the Canary Islands, where there is a higher deduction available?
Well, Miguel, I don't know if you prefer to explain, but there are several regions.
There are three, well, more than three, but basically it's Canary Islands, mainland, and Basque Country and Navarra, which also have different tax regimes. The problem with those jurisdictions, or internal jurisdictions, or different tax jurisdictions, is that you also need investors from those regions. So at the end, if we are saying that for the whole of Spain, there is no limit, and you need to find the investors, obviously, if we receive a lot of projects, maybe that we can reach that limit. But for those regions' incentives, it's easier to reach the limit because there are not many investors, because those economies are obviously smaller than the whole of Spain. So at the end, yes, there are higher incentives, but not so easy to get.
Okay, so basically it's if you can find a taxpayer in the Canary Islands who's got the capacity, then you can get a higher benefit in the Canary Islands. But obviously, if you're just looking at Spain as a whole, it's a lot easier because Spain is a big economy and there will be companies with tax that they would welcome a deduction for.
Also, because of the Canary Island has a really aggressive tax regime in corporate income tax that that makes that the final tax rate that they are paying in Canary Island is really low. So they are not really interested in looking for that kind of deductions because at least they are not really paying a lot of taxes there.
Okay. So in reality, whilst there is a higher benefit, it's very difficult to access. I understand. I think we have exhausted our audience's question answering. So it just leaves me to say, obviously, if we were in a room, or indeed if our attendees were unmuted, you would be getting a big round of applause from everybody just at the moment. But since you can't have a big round of applause, let me say thank you, Miguel, Jacobo, and Juan for a fascinating presentation. I do know that if there are any additional questions that people have afterwards, the contact details of the panelists will be circulated, and they've said to me that they are happy to receive questions by email in relation to anything that's been discussed here. And so with that, thank you to Steve for chairing it at the beginning, and thank you for all of the participants who have attended. I hope you found it interesting. And we will now bring the broadcast to a close. Thank you.
Thank you, everybody.
Thank you.
Everyone.